Hello, Matt Weaver here with CrossCountry Mortgage. Okay, a popular question that real estate agents are getting in today's market, which is, should I wait to purchase a home due to today's circumstances as real estate values could drop? Okay, well, that's a logical question, and of course, I think it's a question that should get answered mathematically speaking. Before I begin, I'd like to go over a report that came out, of course, earlier this year, which is the following. Adam Data Solutions had a report that said 53% of U.S. housing markets are cheaper to own than to rent. And yes, Florida is in that 53% bucket. So we'll just start there. But moving along from there, let's now get into the mathematics. Okay, so I'm going to give you a quick little disclaimer here. I'm going to be throwing some figures at you, so please follow along with me because we're going to come to an end conclusion, which I happen to think is fairly factual, okay? All right, let's get to it. Number one, we're going to first assume someone is currently renting at $3,000 a month. Okay, if they're renting at $3,000 a month, that would mean they would need first, last, and security to secure that rent, which is $9,000. Now, typically the rental factor is tied into the home value. So usually a $3,000 a month rental factor ties into about a $300,000 valuation of the real estate that's being rented. Okay, now what is our total annual cost of the rental? Well, $3,000 times 12 months would be $36,000. All right. Now let's just hold that and put that on the side for just a moment. Now let's walk over to a $300,000 purchase, okay? First and foremost, how much money is needed? Well, there are plenty of programs out there at 3% down, which would mean $9,000 would be needed to purchase this $300,000 house. Okay, well, what about principal, interest, taxes, and insurance? Roughly, what is that payment? Our calculation would show approximately $2,100 per month. Okay, so what does that mean per year? That would mean per year $25,200 in total monthly payment on an annual basis. All right, but it doesn't stop there in terms of ownership, and let me explain. Within that principal, interest, taxes, and insurance payment, there's of course principal, and we calculated approximately $500 a month would be principal, meaning you'd be paying down your loan, and when you sell the home, that money comes back to you. So in fairness to ownership, we have to deduct that from the annual cost because it's your money being put into your home savings account. So that would be $6,000 that we'd have to minus in total annual cost, which would mean under ownership, the annual cost would be $19,200. Okay, now let's take that up against the annual rental cost of $36,000, which the differential approximately is about $16,800 that the person renting would be outlaying more than the person who is owning. All right, now let's assume for a second, in fairness to the renter, that the market started coming down a little bit. And we're going to do a 6% adjustment, which is substantial. So in today's market, real estate values have been going up about 3 to 4% per year, okay? So what we're going to do is we're going to go ahead and eliminate the 3% gain, and we're going to actually go negative 3%, swinging the market by 6%. Pretty fair. Okay, so that would mean on a $300,000 valuation, the property would go down by $9,000. $9,000. However, the cash outlay was $16,800 difference owning versus renting, meaning that the owner is still up $7,800 even with a market shift of 6%. Think about that for a moment. The other advantage to that is the following. The owner does not have to pay for moving costs at the end of the year to, of course, move again. In addition to that, they do not have to uproot their family and possibly leave a school system. There's value there. In addition to that, if someone were to wait a year or two, where's interest rates going to be? Where will they be? And what is that total monthly cost now on a $300,000 house? So there's a lot of variables at play. Folks, you heard it from me. If you're looking to purchase a primary residence, now I'm not talking about someone who's looking to buy and rent out. That's speculation. That's a whole separate conversation. If you're looking to purchase a primary residence, one that you're going to live in for several years, the home ownership game is 100% the way to go. No questions asked. It's figured out. Here's the best part. Your money is already in the game when it comes to housing. There's no cash position. You can't take a sideline position. You have to pay for housing. So are you going to overpay, which would be renting, because of course the landlord has to make a profit, or are you going to be your own landlord? Those are the serious questions we have to ask ourselves. I hope you found this exercise of value. Together in success.